Let's talk about that data center deal. I mean, that was huge. I mean, it was your biggest, I believe. And there are a lot of people saying that the size of these deals that we're seeing, they're just going to get bigger.
So let's sort of look first at the macro picture. The macro picture is that there's an enormous amount of capex that needs to happen, and it needs to be funded. And there's different ways to fund it, but in the structure, you had Morgan Stanley being the lead bank, and then you had a pref equity, and then you had a lot of debt.
Yeah.
And we found the debt to be incredibly attractive, and we flex our size to actually have a very good investment for our investors. We did the exact same thing last week with Oracle. It's in the press. And, we don't know how many more of those there are, but they are quite attractive piece of paper. And, they need to be structured. There's an insurance angle. There's, a due diligence angle. You need to find the right pref equity, the right attachment point, and all of these things. But it's been very attractive.
Are you anticipating to see more deals of this size or larger?
We anticipate to see more of this. They may happen in different ways. Some of the Magnificent Seven don't need anyone to fund themselves, and so they may just go in the public market and issue debt, which is good for us, given the fact with Pimco. And some of them may need more structured transaction. I think all works.
Deals of this size being one thing, but overall, I mean, what does your pipeline look like? What would you like it to look like when it comes to some of this data center financing, especially when it comes to asset-backed finance?
I think the honest answer is we look at the whole world and we try to decide what's attractive and what's not. And so we would compare any infrastructure deal to what else we can do in the world.
Right.
And so these two deals were incredibly attractive. We've done some others which are not public. And the next one, hopefully, will meet our criterion. But the world, all of a sudden, because of what's happening in Iran, there's a lot of attractive opportunity to invest. And you need to sort of rank them and see where they fit. And, we have different clients with different liquidity profile. And some of them are insurance company, and so they only can buy rated notes. And some others have different constraints.
Well, expand on that a little bit more because, you think about what's going on in the Middle East, the geopolitical tension that we've seen unfold over the past 2 months. We talk a lot about the risks, the disruptions, but expand a little bit on the opportunities that you do see for Pimco potentially here.
So I'll give you a snapshot. We have a very successful emerging market business. I hate the word emerging market. When you mention emerging market, I think of France, but it doesn't really apply in this case. We have very good relationship with the various issuers in the Middle East. As you know, they all have high rating, and the FT reported that we had been quite involved in terms of lending money to them. But, you're dealing with AA or AAA issuers who need money and decide to tap the capital market very quickly. And then we either do a very quick one-off transaction or we anchor a transaction where some other people come. And, they were very attractive to us. And once again, it's a very important footprint of what we do.
I am curious, too, particularly with some of these larger debt deals. I mean, are you going to take a much bigger role in distributing some of the debt that you underwrite?
I think we will have co-investment. And I think we work with bank. I think we want a client to benefit from the investment. We're not a bank. We don't have a broker-dealer. We don't try to sell to other people and making a fee. And I think that's been a good model for us. And I think, if you look at the net result of Meta and the Oracle deal, it's been incredibly profitable for investors. And I think that's the alpha and the omega, if I may say.
The alpha and the omega in this environment, whether it's the geopolitical issues, the economic concerns, or even just the market volatility that we've seen here, has that created new opportunities for you in any meaningful way?
Sure. The stress in private credit and in, BDC, we were reported to lend money to one of our friendly competitor, 2-year piece of paper. It was slightly cheap. These things arise because people need help. And, we're going to be very opportunistic and try to maximize return. And, I often say you never know what the game is going to be. Sometimes the game is great, in which case there's plenty of things to do.
Yeah.
And like in period like 2005 and 2006, everything to us looks super expensive.
Yeah.
And so we stay on the sideline and we wait for the for better time to come.
I just want to point out, speaking of game, did you know that Manny was taking time off from the Arsenal-Madrid game?
I know.
To match today.
I know.
Arsenal's up 1-0, about less than 15 minutes ago.
I know.
We appreciate you being here.
No, thank you. When you're an Arsenal supporter, it's a long life of suffering.
Well, we appreciate, you taking a pause on that life. And I do want to get back to private credit. But before we move on totally from AI data center financing, we talked to a lot of people who also see this as a big opportunity that they're pursuing. But I'm curious, in your perspective, what are the risks here? What are you keeping an eye on as, you look to maybe build this pipeline?
So our pipeline is essentially lending money to really safe company. You think of Meta, for example. Meta has $1 trillion of market cap. So when you plug this into a capital structure model, it's incredibly safe. Now, for some other people, they're going to want to build data center in the US. And the data center, you're going to need to think about how fast the obsolescence go, and then what you do with the data center at the end, and how you're going to sell it. And, this is a different sort of risk. We build data center in Europe, so far so good, but I think there's issues, and I think we'll know more 5 years, 7 years, 10 years from now. There are more complicated transactions which have to do with financing chips, GPU. They have a higher return. I think you need to structure them well. Some of them will be public, some of them will be private, and we look at the attractiveness of any possible deal and see how they work out. And I'm sure there'll be here and there deals which don't work out so well. Either people cut corners, or it's less attractive, or people are desperate for.
Well, to your point, it's going to be fascinating to see what the story looks like in 5 to 7 years. But let's.
I don't know about you. I don't remember what it was like when steam came in England in 1770.
No, I'd really have to search back in my memories. But it's.
We were talking about Mesopotamia earlier. Now we're talking about steam in England. So a lot of historical parallels.
Yeah, Mesopotamia is more exciting than steam, but I would agree with that.
Let's talk about the exciting world of private credit a little bit more here, because coming out of the quarter that we saw with all the redemption requests, the question has been raised whether or not this push to put private credit, private assets in general, into 401ks, into retirement systems, whether or not that's an appropriate place for them to live. And I wonder how you're thinking through that at Pimco.
Well, I think there are various layers of the question. I think the first question is the investor tolerance for illiquidity. And I think one needs to carefully think about that. I think the second question is, where do you mark your position? And what's the fair market price in terms of discovery? And I think it's fair to say that in the private equity world, most positions were mark to model. In our world, everything is daily mark. And I think that the moment you attack the retail market, every single investor is going to buy and sell every single day. And so the valuation is really, really important. And I think people sometimes get confused between valuation and then redemption, and then illiquidity, and they're connected but different issue. And at the end of the day, people are going to look at semi-liquid and sort of say, is that better on a risk-adjusted return than other options I may have in terms of investing? And then everyone is going to make different decisions. I think what may not be understood when you talk about the 401k market is that the 401k market is very good for people who retire. It's very cheap. The options make sense from a very long-term standpoint, and you can buy index fund and low-fee fund for a very long time at cheap valuation, and I think that's probably a good thing.
I am curious about what's been going on with interest rates, and particularly, given the outsized roles Pimco has in the MBS market, there's been a lot of talk about whatever's going to happen with Fannie Freddie and whether them being in limbo actually benefits Pimco to a certain extent here. Is that something that you're talking about?
Of course.
Okay. All right.
And my partner Dan Iverson comes from the mortgage world. This is our bread and butter. Mortgages have rallied quite a bit. It's an integral part of what we do, and we're going to see what Kevin Walsh decides to do with the balance sheet of the Fed. There may be more mortgages. Mortgages are really important because that's how we all buy houses. And of course, if there was a way to get mortgage rate lower, everything else being equal, it would help the economy. And of course, it's incredibly complicated in itself.
Well, you mentioned Dan Iverson. I think he was on Bloomberg a couple of months ago, and he kind of talked about this idea of MBS spread compression, the idea that rates would come down. And that seemed to be tethered to also the idea of whatever changes might be afoot at the Fed with Kevin Warsh potentially coming in. Is that something that you yourself have advocated for with the administration at all?
No, we don't advocate.
Okay.
We don't advocate as a matter of,
okay, fair enough.
I would say nearly religion.
Okay.
But
you're wishing for that?
No, all we're saying is mortgages are cheap.
Okay, yeah.
One way you can think about what the Fed can do is its balance sheet and what the Fed can do with its balance sheet. And, I think given the current environment and what's happening in the Gulf, it's unlikely that the Fed can cut rates. Why is that? Because if you were to cut rates right now, the back end of the curve would probably, go up, and then that wouldn't be helpful because mortgage rates are linked to the back end of the curve, not the front end. And so the degree of freedom you have are not that many until the situation stabilizes and people can look through inflation and sort of say, you know what, on a secular trend, inflation is going to go down. And what to kind of come back to what we were talking of before, AI is incredibly deflationary. I mean, I don't know whether you have used Claude in your own personal life, but I mean, it's unbelievable. It's unbelievable, and I think we are big users of AI, and I think it's a big capex investment for us in terms of making sure that.
Well, talk to us about that a little bit more, in the short amount of time we have left with you, because that's a big question across industries right now. How are firms actually implementing AI? You said it's a big CapEx spending. Have you seen a return on that? And if so, where?
Well, I'll give you a very simple example. There's been a situation with a fraud called tricolore, okay? And tricolore is a situation where you have many different parts of an origination platform, and there's many documents to check and so on. What's better than AI? To check at every single agreement and making sure that you have another pair of eyes who systematically look at these things, and you need to basically have the right system to do so, but it's going to give us another way to look at, for example, related party transaction and the cash and who has access to the cash, and just making sure there's another pair of eyes. And that's a good example of what AI can do, and it's incredibly powerful, and if you train it properly, you're going to get to really, really good result. And I think we have a whole database of experience that we're going to train our own model on, use an LLM from the outside, and sort of make sure that we have better predictive analytics in terms of what we do.
All right. Well,
have you always been an Arsenal fan?
Since 1992.
Okay.
1992.
My condolences.
All right.
I know. We won in 2006. We were undefeated.
Okay. All right.
Well, it looks like you're going to win at least this game. I hope I didn't just jinx it.
Don't jinx it.